there was a time where we could buy down our rate, right? You can buy down a rate. You can negotiate the term. Now, not always on the single families, but there's also on the other side of it, rate caps. So when rates ran, we were buying rate caps. So you can buy them down and you can buy rate caps. So this stuff here that we're talking about is it's not that unique. In fact, Danille was taking a client out to a new home subdivision this weekend, and the client went there because of the rate buy down by the home builder. And isn't it ironic that Trump's, Bill Pulte's in Trump's ear here, right? So that's a rate buy down on a brand new home, right? At 3.99.
It was significant. So the builder was offering a deal on some inventory at 3.99 on a $440,000 home that was going to save the buyer $500 a month, which is, compared to the rates, if they were what they are, now, right? And so it's significant. $500 a month is significant savings. It moves the needle for people. It gets people into housing that would not be able to afford it. And builders can do it because obviously they're their own lender, but
they're using their own cash on their own balance sheet to sell homes. And this is the point. This is kind of my point. Trump's using the cash from Fannie and Freddie and basically buying mortgage-backed securities. So it's not exactly the same, but the moves are actually are intended to be the same.
It's funny, EBU on YouTube said, if I were a buyer, I would be buying soon. And I just had a buyer call me this morning, just got off the phone with her. She said, do you think we should wait 6 months to kind of see what happens with the market? I said, I wouldn't. That's not what I would do, because, Trump is really pro-stimulating the market right now. And if you change policy to make that more desirable for buyers, that's exactly what's going to happen. And it's not going to be a lot of first-time home buyers. It's going to be a lot of investors. It's going to be a lot of people that want to up to a nicer house, that upgrade to a nicer house. So you really just need to think about it and really understand that the government typically gets what they want.
Well, right. So Trump's just using the tools in his tool belt, right? That's all this is, right? So as you guys people bitch online about this, but the Fed, that's monetary policy, right? And everybody's like, print. It's creating all this inflation. This is not that. This is actually using cash that's already sitting on the balance sheet of two government entities at the moment. And they're basically buying down mortgage-backed securities. Now, there are consequences to that. Don't get me wrong. It definitely could create inflation, and there's these other things. And I think it's going to be very interesting to see what the Fed does. That's actually what I'm looking forward to is, what's going to happen now? What are the Fed's moves going to be as a result of this? Basically an end around. I love it.
Well, and on our podcast on Thursday, we're going to be talking about the job market, because currently there are more buyers than there are buyers. There's more job seekers than there are jobs. So that's going to be on Thursday for our podcast.
Yeah, make sure you watch that. We're gonna deep dive, because my guess, first of all, I do believe this is gonna happen. Yes, Trump can actually make this happen. That's super clear. He doesn't need any kind of approvals at this point, right? This is going to happen. And then, of course, it takes a little bit of a lag for the market to respond. But my crystal ball is you're gonna see rates. Danille and I were talking about this. It could be a half point to a point.
Well, we're already, just on the announcement that this could happen, we're already seeing rates hit 5.99 to 6.
Yeah, which is huge. It hasn't been in the 5s since, gosh, who knows how long.
A long time.
Yeah.
And so, a lot of my clients have been getting 6s. I even had one that got a 5.99. So it really is doable right now. And that's just with the announcement. It might happen.
Yeah, and guess who's not involved? The Fed. Because again, this is housing policy, not monetary policy. I think it's a big, big difference. And the government is going to basically do what they want.
But I do think it's important to note that the government is most likely going to guarantee these, because they're investing in the MBS. They're also going to guarantee.
That's what they are. That's what Fannie and Freddie are.
Well, so it just leverages the government. And this is part of the reason the government doesn't want housing to fail. Government got really involved in 2008 when housing almost failed. They rescued it. So it would be devastating for it to crash. And that is why they don't allow it.
Yeah. And I would have, there's going to be more moves, right? Because he's talking about releasing federal land. He's talking about this 50-year mortgage. Certainly this is one of the things that he's going to do. And none of these require anything to do with the Fed.
So I know people are watching right now and they're thinking, why won't they let housing fail? Because why won't they let it crash? Because then I can afford a home and then I can buy a home. And right now it's too unaffordable for me and the government needs to stay out of it, because on a normal market without any intervention, there could be some price correction.
Well, that's a really good point. By the way, another thing that happened that everybody should be happy about is Trump's like, we don't want the big institutions buying up single family, right? Mm-hmm. And I watched Bissett talk about this specifically. He's like, that has historically been an American dream. And right now they got into it. As we all know, I was in the middle of this. They were basically buying these houses from the banks back in 2009, 2010, because of the GFC.